So we're going to look at what the volume pattern for key index stocks together are showing, and how a very similar pattern showed up before. Now, in my last video, I did look at multiple intermarket divergences, and one particular period which I covered and explained in detail was this one in 2001. What made it interesting is, one, of course, while this expanding pattern here was forming, let me just mark that in blue to highlight it. This is an expanding triangle that occurred at a time when the US stocks had started to sell off well ahead of our own market. What's important also to note is that this was already, we were into a bear market as far as the index is concerned. Many stocks had sold off, but we still had one key index stock continue to make an all-time high into this period amid what was a lot of volume in the market. Okay, and when I say a lot of volume in the market, I'm of course referring to key stocks, not across the board. But this is index stocks number of shares, and that time existence of Badla market in most of the index stocks created a substantial volume in that area. And this one stock that made an all-time high halfway through this phase was Reliance Industries. So one index stock that was trying to support the market. At the same time, eventually it did pull back. Now that pullback came also after it had actually broken out of a multi-year range, and so the pullback was only a longer term correction, but in terms of the bear market, it was trying to support the index halfway through. So that's the important part I wanted to note, and also note that this volume behavior showed much higher volumes than we've seen throughout this period prior to this phase. Not even at the peak did we see this kind of crazy volume. So that's the important part I want to highlight, and then I'm going to take you to where we are today on the Nifty. Also note that this time period also created a lot of interest on a potential turnaround, because we broke past this falling trend line, and so it was in a sense a kind of hope rally. If I drew an HNS neckline here, you're pretty much holding this neckline if it is a downward slanting neckline. So coming to the Nifty, what we are witnessing right now is this substantial jump in volume. Note, market-wide volume is not so high, it is much lower than what it looks like over here, but Nifty volumes are significantly up. The one stock now out of all the index stocks that appears to be making new highs, and that is Hindustan Lever. Okay, so it's not Reliance Industries this time around, though it was one of the outperforming stocks up to the August highs. Most of the key index stocks are not making new highs right now, not even HDFC and HDFC Bank, they've still not done so. But Hindustan Lever was one that did so, which means in December it made one more new all-time high, even as the Nifty has not yet done that. Volumes way higher than what they were in this preceding period, and in fact these volumes are now equal to what we saw at the bottom of 2009. So this is almost equal to what we saw back there. A very, very similar reading that we are getting. And after a prolonged period of time, though you can see a mild increase in volumes throughout this last few years, the big jump has only come after the sell-off, whereas here the big jump in volumes came at the base and on the takeoff on the way up. So this increase in volumes is substantial. It's already through one sell-off that we've seen in the market, so it's not like we are at an all-time high. And the reason why it makes it very similar is that while people try and make comparisons with 2008, what is very, very similar to what has happened post 2013 is more 2000. And the reason is this: I often called it the late autumn bull market. Old readers would remember that annotation. And the reason I called it that is I thought it was very similar to what was happening in the 90s, which is after 94, the business cycle turned down. But after 98, there was one sector, which was the tech sector, that really led the way up on the back of the global tech bubble. At the same time, we also had participation from what was called I stocks, which is communication, technology and information technology, which is media, and those three sectors became the best performing sectors. This time around, we've seen that happen in areas like NBFCs. We've seen it in particularly in consumption, which is the consumer related stocks, which is why Lever shows up on this chart. And so the similarity in these two cases was the theme of outperformance in particular sectors. The breakout to new highs in the index on the back of only a few sectors, and now at this stage, once we've had a peak and a sell-off, only looking at a particular index stock which is holding out the index amid what is a lot of heavy volume in the index itself, which appears unusual because while some people would mark this as a right shoulder, this is not what you typically see in terms of a right shoulder heavy volume. Of course, on a market-wide basis, the volume here is much lower, but this volume here represents only the Nifty stock volume, and which is why it is similar to what I saw in 2001. What followed then, of course, was a peak in various stocks that were either holding out in terms of not having fallen substantially, or the ones that were the best performing stocks of that time, they finally gave up only after that phase. That heavy volume was a period where people were toying with the idea as to whether the trend up would actually resume, but it did not, and eventually gave up, and the most substantial declines in the best performing stocks came only after that phase. And so we are in a similar point where people are probably hoping that this is a move to new highs, but if this ends up being a failure case, and right now, like so far what we are seeing is only one stock holding out there may be one or two more if I have not looked across the board, but the point is there are not more than even half a dozen that are doing this, and the reason the index is holding up so well is that some of these key stocks that have become large in terms of market cap, many of them have been included in the indices, are therefore keeping the index from really showing the real loss that has happened in the underlying market. And does this volume signify something similar going on, is what we are going to find out. The one word for a key index stock trying to hold up the market is always distribution.